yes. And remember, we had that student who was right out of DeVry undergraduate, didn't have work experience, but had done something at that beauty salon. And she talked about the sales and collection cycle, not just for the procedures that were being performed, but also for the sale of the products.
I've been through numerous audits, some that have been very comprehensive, and some where, you know, it's like as far as AR invoices, you know, some of the auditors, you know, all they want to see is just a copy of the invoice from the customer file. And then some auditors want to, you know, I've had some auditors actually call customers, and then some that would actually send a letter to the customer to verify, you know, invoice amounts. And
yeah, we used to do confirmations, and then we did second confirmations if somebody didn't respond, and then sometimes we called if it was a major receivable, unless we could use alternative procedures like subsequent payment. Oh, interesting. It was a different accounting firm, auditing firm each time, or?
yeah.
Well, despite what subsequently happened, Anderson was very meticulous with regard to carrying out all the necessary functions. I mean, they really pushed that. I mean, it was that greed that came in the 90s, I guess, that resulted in the reduction in quality at all the firms. But it certainly was advantageous at the time. By the way, I was reading about, there's a new company, Anderson Tax Services or something. I'm not sure. If anyone hears about it, let me know. Oh, and by the way, this, in the Insight magazine from the Illinois CPA Society, there were some interesting articles that were in this last one that came out. This is the summer one. One is the blame game. Company's management commits fraud, but auditors fail to spot it. So where do you point the finger? And the other one is the psychology of fraud. A renewed focus on criminal profiling has put white-collar crime squarely in a limelight most perpetrators do their best to avoid. So if you have access to that, or you're a student member of the Illinois CPA Society, some interesting articles there. The AICPA has a journal of accountancy too that some of you have cited, and they usually have a fraud article. It used to be by Joseph Wells. Maybe he's retired now, but they have in every one of their monthly magazines, they have something in that area. And Bill renewed his CPA license. I got the new license. I'm now good through September 30th, 2018. So.
How involved in the process is that?
Well, you have to do it online, and you renew it. You have to answer a bunch of questions. I did get audited last year. They did a random audit to make sure I had attended the requisite number of continuing education courses. So they wanted the proof for 2009, 10, and 11, and I couldn't find 2009. So I had to call the University of Illinois, and I had to call the Illinois CPA Society, and they had the records. And so I passed the audit, but it's not bad. And then it was a $125 fee or something. I did it online. But you're supposed to, I guess, in theory, have your license, displayed. Do you ever notice? I think beauticians have to have their, they have their license hanging in a frame or something, or whatever. Anyway, Letitia was waiting for. She posted yesterday. We hadn't heard from her the whole week, so I'm not sure what's happening, but I'm going to start. I apologize for this exam. It's not mine. I didn't make a lot of changes in it. Maybe the next time, if I'm doing this course again, I'll put some more of my own questions in. I did change some of the final. Remember, in week 8, we'll meet on that Monday night, so we'll have plenty of time to review the final. Here, we've got to try and do this today, and I'm not sure how much time it'll take. We'll certainly get it done by the end of class. I would like to have gotten into some of the chapter coverage that's in for today. If not, we'll have to do some of it next week. All right, there's 2 pages of the exam. I have added an extra hour. When you go to week 4 and you click on the midterm, it'll say how much time in the instructions, but at the top it should have a longer period of time. I tried to add an extra hour just so there wouldn't be as much pressure on you. And I did that in the tax final and so forth.
What kind of
as well.
questions does it say?
Well, they start off with multiple choice, but there's also essay and so forth as well. So I thought I'd go through the subject matter and try and give some hints. In some cases, I might actually be giving some answers out. Sorry about that.
That's all right.
All right. Let's start with the second page of the exam. I like a little better, but let's start with page 1. Multiple choice 1. Now, I deleted 2 of the 3 possibilities because I didn't like them. They were the same question, but a different answer, which was interesting. So what you will get, this is where 5 points. Multiple choice 1, there's only 1 possibility now because Bill deleted the other 2. 5 points. Basically, they're saying, which of the following procedures should an auditor generally perform regarding subsequent events? Subsequent events. Let's comment a few minutes here. I'm surprised to see this on the midterm because one of the chapters I really like in the text deals with subsequent period events. But that's not assigned until, oh, wait a second, I want to give you something here. These were some sample projects. But it's not until like week 7. Bill, let me ask some questions. Let's talk about this a little bit. Why would some subsequent period events be relevant? Why, for example, if I'm doing the audit for the year ending 12/31/15, would I be interested in something that occurred in January of 2016? Why would I be even interested? How could that affect my audit report?
Well, if there was fraud, it would.
In what regard? Well, there could be some misstatement of the financials, for example. Or I think we gave an example last week where a customer at the end of December confirmed the account receivable that they owed to our client. They confirmed the account receivable owed to our client, saying, yes, we owe this dollar amount. But then in January, they declare bankruptcy. This customer declares bankruptcy, which means that the receivable, although it was acknowledged by the customer of your client, probably is not going to be collectible, or certainly won't be collected in its entirety. Now, what might be something you look at, what might be a procedure you might use as an auditor in order to detect these subsequent events? Well, I have a suggestion that will help in this question.
And this is just question number 1, right?
Yes,
Okay,
yeah, just start now. Just start now so your timing is good. How about looking at monthly or interim financial statements? So let's say we're not aware of this bankruptcy, but the client prepared a monthly financial for January 31st, 2016, in which case we see the modification that was made. So, and we'll go through a whole listing of this when we do that chapter in week 7. But looking at quarterly or looking at interim, monthly would be even better financial statements. may detect some subsequent period event that would have an impact on the prior year's financials. When we go to that chapter, we'll talk about two types of adjustments. One requires an adjustment to the financial statement balances. The other requires some type of disclosure. So I guess I've answered that question, but I thought that should have been more final exam oriented. Now, multiple choice 2.
Just send me the first question in email.
Okay. The first possibility talks about a CPA is going to prepare a written report on the application of financial reporting framework to a specific transaction by an entity audited by another CPA. That's too damn many words, Bill. Basically, what they're saying here is that another CPA did a portion of the audit. This could easily happen in a situation where your client has an operation in another area of the country or maybe overseas where you do not have an office. But there's perhaps a regional firm that perhaps is well known, has a good reputation, who may do a portion of the audit. So what you can do here, it says that you could probably accept the engagement. You can consult, accept the engagement, consult with any CPA to get any other information. Or if you're picking up a new client. If you're picking up, let me ask you this, if you're picking up a new client who was audited by somebody else in the prior year, you can accept the engagement again, and you should consult with the predecessor auditor. Now, will they be angry? They lost the client. They have an obligation to answer any questions that you may have.
So the question was
Well, there's a variety of things. You could talk about having another auditor doing a portion of the audit, or I would say it also would apply if you're accepting an audit client who was audited in the past by another CPA firm. I think in either scenario, you could accept the audit engagement. You need to consult basically with the prior CPA or with the CPA who's handling a different section of the audit.
okay.
So make sure you consult with the other CPA to make sure you have all the necessary facts. The way the question's worded, it's very confusing because it's worded by giving the idea that another CPA is doing a portion of the audit, but what I think they meant was you got a potential client here who was audited in their entirety by another CPA firm. You could certainly accept an audit engagement as long as you consult with the prior CPA firm to elicit any facts that might be necessary to help you arrive at an objective professional judgment. Told you I didn't like the wording of a lot of these questions. That's multiple choice 2, possibility 1, but there's some other possibilities. Another possibility for multiple choice 2, again worth 5 points. An auditor reads the letter of transmittal accompanying let's call it a client's annual financial report. They use the word a county. What does this mean? There's a transmittal letter, I assume, that goes out with the financial statements from the client. And it turns out here now with the client's financial statements, their annual report, the auditor discovers that there is a material inconsistency. The auditor discovers there's a material inconsistency between the transmittal letter that went with the annual report and the financial statements themselves.
That annual report is financial statement?
Yeah, the annual report, your company's annual report includes some commentary, financial statements, and footnotes. Maybe there was an inconsistency in the annual report in the commentary. To me here, the question talks about the letter of transmittal. It says something, but that is inconsistent with what's in the financial statements that are in the annual report. And they want to know what action should the auditor take? What do you think? Assuming the financial statements are correctly presented, what would you have the client do?
Fix it,
Fix what?
Is it correct?
the statement.
That's right. You'll have make sure there's a modification made in the letter of transmittal. Now that notice, and this is not part of the question, it would be advantageous to ask the client to show you the letter of transmittal as well as the entire annual report before they are issued. If they did not do that with the letter of transmittal, then basically you probably have to have them send out a new letter. I would certainly want the client to let me see everything before they send it out.
So the auditor should fix the financial statement and make sure that.
No, the financial statements are fine.
Uh-huh.
The auditor should make certain that the client adjusts the letter of transmittal to demonstrate the correct facts. Notice it said there was a material inconsistency. Now again, did you see that directly covered in the text? Maybe it was, but I mean, if it's one sentence out of 5 million, that's why I'm trying to provide this guidance. Okay, third possibility, multiple choice 2. And this one's a little bit better. They want to know when a disclaimer of opinion would be appropriate. When would a disclaimer of opinion be appropriate? Can anyone tell me just in general terms, when you might have when would a disclaimer of opinion be inappropriate? Sorry.
Oh.
I'm sorry. Under which of the following circumstances would the expression of a disclaimer of opinion be inappropriate? Inappropriate. When would a disclaimer be appropriate? Let's talk about that first. When do you normally have a disclaimer that's appropriate? Remember, we had this on the board in week 1. I was going to write on the board today, I was going to list my steps for planning an audit, but I'm not sure we'll get to that. That's why I didn't write on the board. Some of you may think the board is naked. Well, didn't we have down major scope limitation where we were unable to get access to records, or we weren't able to satisfy ourselves with regard to alternative procedures? That normally is the situation where you probably have a disclaimer. When would you have a qualified or adverse opinion?
When you need to, adverse would be when you disagree with it, or you, okay, qualified is where you're adding notes.
Oh, I qualified might be a failed to properly disclose, or it could be inconsistent application of accounting principles. Okay,
Adverse is when they're not fairly presented.
that's right. Usually it's a failure to file a gap or something of that nature. So, if, for example, management did not provide reasonable justification, if management did not provide reasonable justification for a change in accounting principle. For a change in accounting principle. What type of opinion would probably be appropriate? They changed the accounting principle. They did not provide reasonable justification for the change. What type of opinion would you use there?
A disclaimer.
I don't think it'd be a disclaimer, because a disclaimer is usually a scope limitation where you don't know. Here, we don't feel there's adequate justification for a change in accounting method.
So
That
adverse?
I would say either adverse or qualified based on materiality. Either adverse or qualified based on materiality. All right, are we okay so far?
So the answer for when would a disclaimer of opinion be inappropriate?
Well, I don't want to say,
Okay.
I don't want to go that close,
Okay.
but
Okay.
what I've said should be
Right.
sufficient. Usually it's major scope limitations where you can't satisfy yourself with alternative procedures where a disclaimer is appropriate. So make sure you have that written down in your notes. Now, multiple choice 3, possibility 1. Deals with auditor's independence. Auditor's independence and when they would be considered to be impaired. When would an auditor's independence be considered to be impaired? Can someone just give me a broad generic answer?
If they owned stock in the company they were auditing?
Yeah, whether it be a direct or indirect interest. And the textbook kept talking about that is material relative to the auditor's net worth. I never thought that was as relevant, but I guess it probably is. If something were 1/4 of 1%, as opposed to, let's say, 10%. So there may be a materiality element as well. Possibility 2, multiple choice 3, again 5 points. Okay, it says, which of the following elements do these audits have in common? And they give you some answers that I can't give you, but let's discuss what all audits would have in common. What is one thing we'd have to do on every single audit? As kind of a prerequisite to really planning the audit. And now it's also involved under Sarbanes-Oxley, Section 404.
Brainstorming plan.
That's SAS 99. What does Sarbanes-Oxley 404 cover? Although this was part of every audit even prior to Sarbanes-Oxley. Remember, we have a management assessment, and then we have an auditor's report or opinion. This will be in next week's chapter, by the way. So this is really part of next week's stuff, but you have to take the exam, within a day after our class next week. What does 404 cover, everyone? Please, please. It's the most controversial section of Sarbanes. Someone talked about it in the online discussion, week 1. Well, that's where management is supposed to do an assessment of the system of internal control, and the auditor then must give an opinion based upon that. So that was even required before Sarbanes-Oxley. You had to document the system of internal control. In your course project, I'm going to have you do an internal control narrative. The chapter next week will talk about narratives, questionnaires, and flowcharts. So that's something that all audits have in common, making sure you will fully understand the system of internal control so you can make sure that the appropriate standards have been met. I thought you guys would know 404, right? You're feeling the exam pressures, I can see this. The next and last possibility for multiple choice 3. Which of the following procedures would an auditor least likely perform? Which of the following procedures would an auditor least likely perform in planning a financial statement audit? Least likely perform in planning a financial statement audit. Now, this is one where I really, it's more difficult to give guidance.
Is it, I'm just having a quick question, is it like if,
No, go, okay, I'm trying to. Boy, this is a tricky one, jeez. Would you mind if I gave additional guidance? Two of the answers are definitely not right because they are ones that you would do during an audit. But the answer they want, excuse me for giving this away, the answer they want is discussing matters that may affect the audit. This makes no sense at all. Discussing matters that may affect the audit with firm personnel, discussing matters that may affect the audit with firm personnel responsible for non-audit services to the entity. Bill, please repeat that, I will.
The enemy.
Discussing matters that may affect the audit with firm personnel responsible for non-audit services to the entity. With firm personnel.
I thought you said enemy. I'm sorry.
Oh, client personnel responsible for non-audit services to the entity. Now, the explanation for the instructor makes no sense whatsoever, really. They talk about Rule 101 of the Code of Conduct, which has nothing to do with this. They're not talking about the auditor having a financial interest. So again, we have another screw up here. So if you get that question, mark that answer, discussing matters that may affect the audit with firm personnel responsible for non-audit services to the entity. There's a few cases here where the instructor explanation has nothing to do with the question. That one, the explanation talks about auditor's direct or indirect financial interest. What does that have to do with that answer? All right, multiple choice 4. Wants to know what type of audit report, 5 points again. Possibility 1, what type of audit report would be appropriate? And then they give us a factual situation. Well, this one I think is kind of obvious. If you haven't done an audit or a review, but you're associated with the financials, you are, I don't explain what that means. Were you responsible for preparing some of the financials? It says you're associated with the financial statements. But you didn't do any audit or review. What type of audit opinion would be appropriate? If you didn't do any audit work, you didn't do any review, I guess if you shouldn't do anything in actuality, but if you expressed an audit opinion, it would have to be a disclaimer. What a weird question. Somebody at corporate thought that was a great question. Yeah, you would, I mean, you would not be able to do the engagement to begin with, so there would be no audit report, but they want a disclaimer, obviously, for that one. And the model answer just says, a disclaimer of opinion is issued when a CPA is associated with financial statements of a publicly hired entity, but has not audited or reviewed such financial statements. I agree with the answer, it just seems kind of weird, because you wouldn't be entitled to audit the financials, because you did work with the financial statements. I'm assuming you're doing write-up work, and we said that 101 would ban you from doing that under Sarbanes-Oxley. Okay, possibility 2. They want to know when an auditor would most likely express an unmodified opinion. An unmodified opinion without any additional paragraphs. Remember, we talked about unmodified opinion, but you could have extra paragraphs. For example, remember we talked about if you have going concern issues, unmodified opinion, but there would be extra paragraphs.
I'm sorry, did they literally call it extra paragraphs?
Well, they said, and would not add emphasis of matter or other matter paragraphs.
Okay,
So I condensed that, would not add extra paragraphs.
but they do call it paragraphs. I'm sorry,
Yes, they do call it paragraph. No, don't apologize, Lena. These are weird questions. There's no doubt about it. That's why I'm thankful that we're meeting in week 8, where we're going to have a whole evening to go through the much longer final. Although Bill has removed some of their questions and replaced them. Okay, now one of these, so they want to know when would you have an unmodified opinion and you would not be adding any extra paragraphs. Now, one of these answers would be maybe unmodified, but there would be extra paragraphs, so we know it's not that one. And another answer would be of that type. The only thing, so it's 4 possible answers. 2 of them I think we could omit quite readily. I would narrow it down to the other 2, but I want to make sure I get it right on the exam. So what might I share with you? If the client changed their method of accounting, if the client changed their method of accounting, that could result in an additional explanatory paragraph. That could result in an additional explanatory paragraph. Now I want to comment on that. That means that is not the right answer, right?
Right.
But just between us, not for the exam. If the client changed method of accounting and fully disclosed that in the financials, you could give an unmodified opinion without the extra paragraph. But if you mark that answer, it's going to be wrong. So I guess they're assuming here that the client did not disclose adequately the change in accounting principle or method. See what I'm getting at?
so you're saying the opposite of the answer.
Well, I'm
Because you're saying the
that
opposite of the question.
there's 4 answers. 2 of them are obviously wrong.
Okay,
I narrowed it down to the other 2. So the one about the auditor agreeing with the entity's change in its method of accounting, do not mark that answer. Because in theory, if the auditor agrees with a change in method of accounting, or they're talking about method of depreciation, that could be an unmodified opinion without extra paragraphs.
If they've disclosed that in the
If they
financials.
disclose that, but they didn't mention they disclosed that, so you have to assume, so that is not the answer. It's the other one. It's the other one, which I would agree with. But I would have narrowed it down. If this were the CPA exam, I would narrow it down to 2, and I'd almost be flipping a coin. Because they should say, concurs with the entity's change in method of computing depreciation, and the client has not disclosed that information. That's what they should have included. So don't mark that answer. So is the other one. I knew this was going to be painful today.
Yeah.
All right. But am I trying to make it kind of clear? Okay, all right. All right, the third possibility for multiple choice 4. Okay, it turns out the CPA suspects there are some illegal bribes that are involved with a new audit client. You suspect some illegal bribes associated with a new client. You contact the audit committee and legal counsel. You do contact the audit committee, which is good, and legal counsel. But they can't help you. They can't help you in determining materiality. They have no idea whether this is material or whether senior management is involved in the scheme. So the audit committee and outside legal counsel they said, we can't help you. We don't know who's involved. We don't know how material this is. What type of audit report would be issued? Illegal bribes, we don't know if they're material or not. No one can assist us, we just don't know.
Disclaimer,
Disclaimer.
because you don't have enough information
Don't have
to.
enough information, exactly. That one was okay. Some of these are okay, but some of them are really strange.
And if you knew for sure, then it would be adverse.
Yes, yes, exactly. And one of them says, one of the answers that's not the correct one says, express an adverse opinion. But the issue here is we don't know. It could be completely immaterial. That's why disclaimer, Lena's answer was correct. Okay, multiple choice 5. 5 points. Possibility 1. Which form of evidence, this is from today's chapters, which form of evidence is most reliable? Now, there's 4 answers. I would definitely know the answer to this one. Let me, without giving away the answers, let me present something. I added it as a topic in the online discussion today. Which is normally more reliable? Documents that are prepared internally versus external documents that come from an outside third party.
External documents.
External documents, that should help you in this one. Something that maybe was prepared by you, but it went to an outside third party before it was returned. Lena, I think you also talked about what could be confirmed. Did you answer that? I looked at that this morning. I think it was your online discussion.
I talked about external documents, yeah.
Yeah, but think about what can be confirmed. If you get a confirmation from an outside third party.
Oh, what kind of documents can be confirmed?
Yeah, and you had a posting, I think it was yours.
Yeah, it was.
Yes,
I just didn't understand the question.
you and Letitia were the ones who posted, although Barry also posted those since
Like
last
accounts.
night. So, yeah, so like accounts receivable, those are coming from an outside third
From a
party.
client,
They're more likely
yeah.
to be reliable. Okay, possibility, so that's a pretty good question then. Possibility 2, multiple choice 5, which is not a characteristic, of the reliability of evidence, which is not a characteristic of the reliability of evidence. Now, in the chapter itself, which I don't know if we'll get to today, it's a great I like the chapter, I love some of the homework in there. They mention some items that would determine, in fact, there's a problem that says, which of the following is most reliable and why? And one of them, which kind of relates to what we just talked about when we said external third parties, is the independence of the provider. Independence of the provider means the person is more likely to be objective and therefore to provide reliable evidence. Remember that homework problem? Anyone work on that before? We're waiting for you to go. Another one is the timeliness of the evidence. Something prepared as close as possible to the time of a transaction is more likely to be reliable. I run into that for myself. I wait till, I say, if something happens on Monday, I say, well, I'll document this on the weekend when I have more time. Then the weekend comes and I can't remember everything about it. Another one that was in that listing was the effectiveness of the client's system of internal control. The stronger the system of internal control, the more reliable information may be, especially if it's coming from the client themselves. How about the qualifications of the person who provides the information? Qualifications of the person providing the information. That could be another factor that was in that problem. Like, I think they talked about if you have a gemologist who looks at a gemstone, that person knows about the different C's associated with a diamond, for example. Was it clarity, color, carat? I don't know, I don't remember all the C's, but whatever. Is that person qualified? You show me a diamond, give me a magnifying glass, I don't know if that's a good stone or not unless there's an obvious flaw. What about auditor's direct knowledge? That was a factor, auditor's direct knowledge. Let's say you ask me to, after class today, to count the number of tables that are in the classrooms on this floor. I can count. And I do it myself. I have direct knowledge. And what about this? Degree of objectivity. Counting tables. There's nothing subjective about that. This is a table and that's a table, so I'm up to 2. 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. As opposed to evaluating, for example, the quality of some material. That's more subjective. So this is a good question. 2 of the 3 possibilities are which of the following is not a characteristic of the reliability of evidence, 2 of them. And those factors I just gave are definitely factors that would influence reliability of evidence. So I will give my plaudits to multiple choice 5. It's the first question that I really liked that was on this exam. Okay, multiple choice number 6. If the PCAO, this is possibility 1, 5 points again, possibility 1. If the PCAOB says an auditor could, C-O-U-L-D, could perform a specific audit procedure, what would determine whether the auditor should perform the procedure? What would the auditor consider in determining if they should do it? In other words, the PCAOB auditing standard says we could do this procedure if we deemed it necessary. What determines whether or not we should do the procedure? How would you determine if you're the auditor? What would you do to decide whether or not you should do this extra procedure? What would you rely on?
Financial statements?
A little more specific, or maybe a little broader, I'm sorry. What have you been trained to do? Would you automatically go to the audit committee of the client to ask if you should do the procedure? No. No. Let's say you've been doing audits for many years. Whether you should do an optional procedure, what would you base that upon? Your experience. You rely on your own professional judgment and experience. That's what they're looking for. Makes sense. You don't go to the audit committee for that. The audit committee is going to be aggravated if you keep going to them, and that's not the type of issue they're supposed to handle. Use your own professional expertise and judgment. Now that means that decision needs to be made as somebody higher up in the audit team. Don't take an inexperienced assistant on their first audit. All right, possibility 2, basically, when would a company be least likely? When would a company be least likely to reevaluate? When would a company be, now this again is in next week's chapter, when would this is the materiality chapter, when would a company be least likely to reevaluate materiality levels? When would a company be least likely to reevaluate, I'm leaving a couple words out, materiality levels or tolerable misstatements? When would you be least likely to reevaluate? Now, when you read that chapter, I was looking at that this morning because I finished with the online discussion and I had some time to kill. Then Mike Vasilou showed up. He's been in China the last few weeks, so that ended my study. But I was reading through the chapter and they were talking about how you set up a materiality standard initially and what your tolerable misstatements are in your initial planning of the audit. So from that chapter, which is down for week 4, when would you be least likely to reevaluate that? In other words, the other circumstances, you would be very likely to reevaluate those. Well, one thing that comes to mind for me right away is if I saw significant differences, this would be a case where this would not be least likely. This would be where I'd be more likely. If I found significant differences between actual data and what I had estimated data or projected data to be. So if I found out there were significant changes from what I had anticipated, I would be more likely, so that would not be the answer, I'd be more likely to change my materiality estimates and acceptable tolerable misstatement. So that certainly wouldn't be the answer because I'd be more likely, and they want us to indicate when I'd be less likely or least likely. Also, what about the impact on a reasonable investor?
Is this the next question?
And it's still part of the same one.
Okay.
So if a reasonable investor would be likely to be influenced by something, then I am more likely to reevaluate materiality levels or tolerable misstatements. What if a client indicated they could not provide information to us within the time period originally designated? So they asked for an additional period of time. Maybe they only need another few days. You ask the client to provide you with information as of, let's say, January 12th. They're asking for an additional few days. Would you likely reestablish materiality levels or tolerable misstatements in that case? They asked me for a little bit more time. I don't think I would change anything yet until I actually got the data. So, which is the right answer going to be?
That one?
That one. That's it. I don't know how to do this without giving some of these away, but it makes sense. I mean, it doesn't say how long they're asking. It says they can't meet the deadline. I'm assuming they're not asking for an extra month. I assume they're only asking for an extra few days. Third possibility. They want to know, this is under the appropriate standards, the nature and extent of required planning activities for an audit. Okay, audit planning would be influenced by all of the following factors except. So planning an audit would be influenced by all of the following factors except. Okay, let me ask you a few questions here. Would the size of the company or the complexity of its operations, would the size of the company or the complexity of its operations influence your audit planning?
Yes.
Hell yes, yes, definitely. Would your previous experience with the client influence your planning of the audit? Prior experience, I'm assuming you were on the audit before. Oh, definitely. I can attest to that one. If you were on the audit before, you know who you can deal with and who you can trust the most from the client, or who is going to give you the most reliable information. So you want to make sure that's part of your audit plan. What if you begin an audit and you see some unusual circumstances that you had not, let's say, considered? Maybe the client engaged in a new type of transaction. So there's a change in circumstances. Would that influence your audit planning?
Yes.
Definitely. So those are not the answer. So it's the other one. Although, again, I don't care for this question that much because the timing of certain items could be impacted by the answer they have down here. Okay. So the three that I indicated would influence the planning are not the answer. So obviously, it's the other answer. Okay, number 7. Again, 5 points, 3 possibilities. Possibility 1. Well, basically, possibility 1 goes back to chapter 1 to the definition of auditing. And I don't have to say anything else more about that. The definition of, bless you. The definition of auditing. Possibility 2 wants to know, and this was part of this week's chapter, analytical procedures must be used during which phases of the audit? Must be used during which phases of the audit? Now, I'm going to give this one away because to me, analytical procedures should be done at all stages of the audit. But they want to know the word, I think the key word here is must. So what they're looking for would be the planning stage and the completion stage. So it's the planning stage and the completion stage. So you'll need that to get the answer correct, not the test of control stage, not the test of control stage. That's to get the answer correct. However, Bill believes in analytical procedures at all the stages. But you want to get this question correct for the exam. Possibility 3. Which statement is not correct? Okay. It's only 3 answers here. Now, this was the exam as of June 6th. I hope they don't change it on me. I don't think they will. It's been the same exam for some time. Okay. Let me pose this question. This one I'm sure you can answer without any guidance. Would I be influenced in the test that I perform by the cost that I might incur? Should that be a prevailing factor in determining what audit procedures I'm going to use or what sample sizes, the cost to me of those particular items?
Yes?
You said yes, and you kind of shook your head no, Lena.
No, I said yes. Because isn't cost always like a part of planning?
But aren't we supposed to meet audit standards, any cost that would be incurred on an audit would be passed on to the client. If there's going to be a significant change in the cost from what we estimated, then we need to let the client be aware of that. But cost per se should not influence sample sizes or the audit procedures we're going to engage in. If we find some irregularities, we got to expand our sample size. We got to do more procedures. The fact that it might be more costly or that it could take more time should not influence our decision. But I would advise that you tell the client that. We've uncovered something we did not anticipate. This is going to result in additional audit time. So it's going to influence both when we sign off on the audit, it's also going to influence the amount that we bill.
When you make an agreement with a client to audit, how does that work? I mean,
That should be in your audit engagement letter, where you basically will give an estimate of what you believe the cost of the audit will be and when the completion date should be. But that would make sure you have CYA language in there, assuming we don't uncover any unforeseen circumstances. But then I would put in there, if we do, I will notify you immediately about any additional cost or delay that would be incurred on the audit. They don't mention that part in the text, but I think that's instrumental.